Hey traders, Franco here. This video is going to be about one of the techniques that I use to find key areas in the chart. Where to buy, where to sell. I don't use one specific thing to find buy or sell areas. I do a collection of things, right? But one of the things that I use is the horizontal volume. And this is what this video is about. Let's jump right in. This is the daily chart on the ES. And before I explain you what is horizontal volume, I'm going to show you how to put it in the chart. Okay? If you have NinjaTrader, you have to have the license with Ninja. If you don't have it, I'll show you how to do it on Tradingview. I use Tradingview on a daily basis, and that is free. You can create an account and get these indicators. Okay? So how you do it in Ninja is this. You go here on the drawing tool and you look for order flow volume profile. Or you can do Ctrl+3, that's a hotkey. And you select one candle and you include a group of candles, and then you have the volume profile within those group of candles. Okay? I have set it up at 30%. If you double click the value area, meaning the highest 30% of the volume is being highlighted, right? If I change this to 60%, you can see here on the background how the highlighted area is a little bit wider, okay? I have found that 30% is a good sweet spot for me, for my trading psychology, for my trading strategy, okay? So that is the volume profile. You have drawn the volume profile, your first volume profile already, okay? If you don't have the license with Ninja, if you're a funded trading and you don't have the license yourself, you didn't buy it from Ninja, but you were provided with a license key from this funding companies, you can use Tradingview. Let's jump right into Tradingview. And here it is. This is the same chart. Let me get rid of this. This is a daily chart. So what you do is you go to indicators and you look for, you can type in on the search bar, fixed range volume profile. Fixed range volume profile, right? And you can add it as a favorite, and then you can come here to the left panel and click this fixed range volume profile, select few candles and then group them, and it's the same. You see like very similar highlighted area than Ninja. Same thing, you can change parameters here. I have 25, but if I put 30%, you don't see major changes, but there were some changes, okay? So, and then you can draw the area and start from there, okay? For those who don't have Ninja, go to Tradingview, create your account, you will find this, okay? Let's go back to Ninja though. So, what the horizontal volume is the amount of contracts that were traded in a single price. For instance, in this 44, 13, 25, you have this much contracts being traded. Whereas if you go back down here, you see this. This is like a smaller bar. Let me wider this. See that? Here you can notice how this amount of volume, if you represent it with this arrow, right, it'll be like here. And in this one, you can say like here, right? You can see how many contracts were traded here, how many contracts were traded here. So the wider these bars are, the more contracts you will find, right? And the yellow one is the one single tick with most volume, which is 44.19 in this case. Okay, so you will hear me, if you see on my live streams, you will hear me talking about high volume nodes, volume profile, or commitment of traders, or value areas. I do consider the three things the same concept. So you will hear me sometimes saying either of those terms. Which in reality, COT, a commitment of traders, is this one single tick, meaning this yellow line, that's the COT. And the high volume node, I consider as an area, okay? So I start with the daily chart every day, because I day trade. I don't want to get caught against an area created in the daily time frame. So the daily time frame gives you a context of what the market is doing, what the trend is on the higher time frame. And I go down in time frame. I from the daily I jump down to the 4 hours. Now the 4 hours is a time frame that I like to use, including the Globex session. And when I include the Globex session, you cannot see here any gaps, and it's important because you have a continuous chart, right? You can see when the overnight went, where the overnight was, and then you can see how prices behaved during the overnight. So there are two ways you can exclude the overnight, and you can include the volume here. You go here and on the indicators and go down and include the volume here, add. You can see clearly here how when the market is open between 9:30 and 4, the volume is higher, and when the market is closed, the volume is very marginal, it's very low. Okay, I don't like to use this way. I look at the 4 hours pre-market, but after the market open, I just ignore it. And when I think that the market is approaching to a very key specific area, I go down in time frame. So I go down in time frame to the 30-minute. Why the 30-minute? So the 30-minute, I found that there are 13 candles in the regular trading session, and I think, for instance, if you use a 60-minute, you will have 6.5 candle, whereas the 30 minutes is 13 entire candle of 30 minutes. You can do the same with the 15-minute, but then you will have more candles. And if these areas are like 2 weeks, 15 minutes are too many candles for the screen. 30 minutes I find is very, very nice for me, right? So the way I draw these things is, all right, I want to see where the volume started. Oh, sorry, when the range started, meaning when the range, when prices came into the range and started to create the range. So here I can see, like, here can be, and then you have around this level, you can find like this one, okay? And you will say, you cherry picked it, right? Because it came back and reacted perfectly. And you're right, I cherry picked this area because I want you to see how this thing works. And this is a textbook situation for you to think how the market is thinking, okay? There are a lot of variation, and I will say that being very precise, like it is in this setup, is not the best choice, and it hasn't been for me, because when I want to be too precise in the market teaches you that it's very messy, and there are different situations and that every day is different in the market. Okay, but I want you to appreciate this setup, because this is one of the best textbook setup that I found recently. This was created just a couple months ago, and actually I traded it. Actually, I was trading these days. Okay. All right. So here you can see how prices came here, arranged up, then down, staying in the range, and then from here it exploded to the upside, right? You can argue, yes, prices were within this high pivot, and you are right, okay? But if you are trading this like this, you're not seeing anything. You would see, oh, this thing went up, okay? And then now, a couple more days trading here, still trading on the upside, okay? So this is a real situation when you're trading. Oh, wow, you had this range, it came up, came down, now went flat for a couple days, and then boom, rejection, okay? So this is not that's why I like to use the regular trading hours instead of this one, because you can see gaps. And gaps give you directional conviction. When market gap and it didn't close the gap in the next trading session, you have a directional conviction. And when that happens, value is being perceived in a different level than it was before. Okay, so let's jump into the regular trading session here. All right, this is the area. And you can see here how you have 1, 2, 3, 4, 5, 6, 7, 8 trading days, and prices were basically arranging. Okay, so what I would do is, okay, I'm gonna put this, and then right after the gap. Okay, my computer is going nuts. Okay. So I have the value area here. The majority of the volume was traded between these two levels, right? So value is around this level. Okay, so, and you say, Franco, but behind you have here, it was around the same level, and it went up and then came back to this range again. And I would say, all right, so let's see what happens. Let's see if we can include that into our volume profile. And I will just highlight this with the Ctrl+3 tool. And then you can see that value is very similar in level, right? Where was the value here? Do you think is very different? I don't think it's very different. It's between these two levels, right? I would say like from here to here, right? All right, so it's similar levels, right? And then if I get rid of this, I go ahead and include this. And you see how value is in the area, is in this area, okay? I want to narrow this. I want my mouse is like this, acting crazy. All right, and then you have this gap up. You say, wow, I do have accumulation zone here. Why? If we approach prices from above, we consider this as a buy area. So my personal consideration is like either traders are gonna show up here, number one, or there is a big institution with sitting orders here waiting for prices to come back to continue buying. Okay, these are the two assumptions that I have when I mark up an area. Okay, so, and you will see me on the live streams doing this. I put a green zone here. That's a demand COT. Okay, and I distinguish demand COT from resistance or support. I put different colors, etc., etc. All right, so this is the value area that I am considering. Now you tell me, Franco, but all right, I didn't catch this trade. So now what happens here is that, all right, so you have a sideways movement, then you have a gap up. You didn't trade this, right? Because you didn't have, and I didn't have it set up by the time. We have this gap up, and then you have this couple days. Then you have a holiday hit in the middle, but you have this, I think this was a Friday, and then a holiday have like half day of trading, and then the next day. But what happens here is that value was above here. Prices didn't come back to close the gap immediately, right? It didn't come immediately. So value was perceived differently here. Value was before here, then here, then value was created here for 2 days. 2 days. Okay. So what you do here is you say, all right, so I definitely have a demand area here. It's this one, right? Right here. 44.21. Prices gapped down, came here to this level, was bought, and then we have a further continuation to the upside, right? Remember, this is a textbook example. I want you to be open-minded and say, all right, sometimes prices will not react like this way. Sometimes prices will come here. The market is very messy. If you see here, there's a lot of volume also here. If I put here 40%, right? Then the demand is here. Okay? So it's subjective. You need to practice and find your sweet spot, your risk tolerance. Um, and then a continuation or the area didn't show any effectiveness and then it failed at the end. Okay? Those are possible scenarios. You need to understand that when we day trade, we play odds. We don't play certainty. There is no certainty. And this is hard, it's tough to embrace that. And you gain more, the more you gain experience, the more you understand that you need to play the odds. And how do you put your odds, how do you put the odds on your side? All right, so there's several things, but I can name a few right now so you can put it in consideration. So there are certain rules. For instance, the more days or the larger the balance, the stronger the area. The more days, I repeat, the more days or the more time the balance is, the stronger the area. And also, the more days the balance area is, the more time I can take till prices come back. Meaning, if I have a balance of 2 days and prices went to a certain direction and then came back next week, I'm willing to take those 2 days balance. But what if I have a 2-day balance and then prices don't come back for 6 months? I will completely disregard that area. Okay? Whereas if I have a 2-month balance area and I have a COT, I have the perfect setup, I have gap in, I have a gap in here and a gap out here, value perceived above, and then prices came back. All right, I have a 2-month range and then prices came a year later. I will consider that. I don't have a ratio of how much time. You will have to find yours. Okay? I will tell you, like, several weeks of trading sideways can work up to 6 months to a year. Okay? And that is based on my back test and the current trading that I'm doing. All right, so let's say you didn't caught this trade right here because it was, wow, you were scared, this gap down, you didn't buy here. Now, after it came here, it didn't touch the COT, so you completely ignore it. And then you have a gap up here and prices just flew. Okay, it went above, you didn't take the trade, and then you think that when prices come back down again, you will take this trade again. Well, you will not based on my analysis. I will only take this thing once, and I do this analogy very often. It's like a glass of water. When prices come back here, the glass is full. After it touch here, probably you have like half glass because all these orders were already filled. And when it comes back here, probably you have a quarter glass full, and then you have another thrust. But then if it comes one more time, you don't know. Okay? So my assumption is that one touch, highest probability. So that's what I trade. Okay? Now you say, Franco, but prices stayed in the range for 1, 2, 3, 4, 5, 6 days, and then finally broke, right? Because you would assume that this is an entire range, and you are right. You are correct. Now, there's one thing here, okay? If you were trading here, right? You were trading after this, you would say, all right, prices are gonna come down, okay? If prices come down, I will take this thing long, okay? Now, prices came, you didn't take it. Now, it went, and you would say, oh, all right. So now instead of this, I will just include these 5 more days or 6 more days, right? And the value area is similar, isn't it? Well, it's not. Well, it's not. So here's the entire demand, right? But the thing is this. After this thing moves moved out and retested this, right? Now, if you want to find where value is these days after being traded here, you do the same and you study. All right, is the 30% highest volume within the range traded at the same level? And you can clearly say that this level is not the same as this level. I don't know if you follow my idea. The thing is, this level and this level are very different. Value is now being perceived in a different level. And to prove that, prices came here and rejected immediately. Immediately. Okay, very little trading right here. Then it came back and buyers showed up again. Okay, now the majority of this trading volume was traded up here. So here is not the value area. Now what happens now is that when prices come down, I assume this area is tested already. That means, with the analogy of the glass of water, less water in the glass, and then the third time, probably less water, right? And we can see what happened later on the days. We did have some sort of reaction. We closed here in the afternoon. We gapped up. There were some traders there, yes, for sure. Then it came back here. Again, some traders trying to push prices up, but at the end of the day, it ended up failing because it was already empty. There were no more traders there, okay? Or the other side of the trade was overwhelmingly stronger than the buyers here. That's why we play the odds. We don't know what's going to happen. We need to play the odds. Okay, so now you know how to draw this. Put a comment below if you think you have any question. I do go live on YouTube during the week, a few times a week. So you can ask me any question about this volume profile. Okay. One another couple things that are very important. Previous trading day volume profile or high volume node is very important because you can draw these volume profiles on a daily basis and know where value is being traded at. If you see that the majority of the volume is traded in a different level, you can assess that value perception is being changed. It is changing, sorry. And when value perception is changing, you will have a move to a certain direction. Okay? Remember, this is all contextual. I don't trade this area unless I do have the dollar on my side and the market internals are supporting the move, right? Everything I trade is on a context base. That's why I call the market context the best thing that ever happened to me, because I'm able to understand what the market dynamics is, where the money is moving from and to, okay? And levels in the ES. So if you like this video, please give it a thumbs up and consider subscribing to the channel if you like this content, and see you in the next video.